Hi, I'm Liz Robinson with the Blassys update. Most people take a trip to the bank for granted. Some may even see it as an errand or an unwanted hassle. However, in some countries, access to a bank is limited and therefore can be seen as a luxury. According to the Banco Central ng Filipinas, or the BSP, 70% of the banks in the Philippines are located solely in Luzon, which means that the rest of the country is seriously lacking access to banks. This is an indicator of the government's lack of poverty reduction efforts. The Philippines was ranked very low with its Financial Inclusion Index score, ranking only 120 out of 176 countries. The FII score helps indicate how many ATMs and bank tellers a country has per adult. The Asian Development Bank, or ADB, also released a report showing that the Philippines is running behind its neighbors when it comes to access to banks, and that the access to bank and financing directly correlates with raising income and reducing income inequality in markets. In response to these statistics, the BSP is offering incentives for banks that expand their branches to areas where banks are scarce, starting earlier this year. Before the incentives were offered, most banks found it difficult and unprofitable to set up locations farther out than the main area of Luzon. However, after the BSP decided to waive processing fees, the cost to set up new branches in far-fetched areas is expected to be much lower and more achievable. In addition to this new incentive, microbanking offices, or MBOs, are now able to offer educational, health, and emergency loans, in addition to the smaller loans and deposits they were able to offer before. The Philippines also has had a history of embracing microfinance since 1997. And with the help of the BSP, gains in poverty reduction have been made within the past year. The Philippines may still fall behind other countries when it comes to poverty statistics, but efforts in microfinance and the addition of banks has already proven to help move the country forward.